Good afternoon, everybody, and welcome to JoshuaGaming.com. Today is Saturday, August 27th, 2011, and I want to recap on the previous week. We saw some big things happen both in the stock market and also in the commodities markets. We saw the whole week driven by speculation of what Federal Reserve Chairman Bernanke would announce at his speech yesterday in Jackson Hole, Wyoming. And Federal Reserve Chairman Bernanke came out and said that the Federal Reserve has no plans of implementing another round of stimulus in the immediate short term. However, that they are prepared to take whatever actions are necessary to help stimulate the economy moving forward. He said that the Federal Reserve plans to meet for 2 days next month in September at their annual meeting, whereas they normally only meet for 1 day. So what's going on? The stock market kind of held steady all week, had a big day yesterday, and finished about 400 points up from where it was at a week ago. This is a huge reverse because the cycle had been down for 8 weeks straight before that, and it had fallen about 2,000 points over those 8 weeks. Gold and silver continue to be performing. We're down a little bit from where we were at a week ago. However, gold, it finished around 1830 after a massive dip, which happened right when it hit the $1,900 level, and which was an all-time high. So gold got to $1,900, a bunch of people sold out. It had a big dip down into the low to mid 1700s, came back up and finished around 1830 after also having a huge Friday after Bernanke's speech in Jackson Hole, Wyoming. So even though Bernanke did not say that the Federal Reserve was going to enact any stimulus in the immediate short term, he did say that they were prepared to take whatever actions were necessary, and it looks like investors both in the gold markets and also on Wall Street found that as encouraging positive news because both markets went up. And we've really been seeing those markets do the exact opposite of each other the last couple of weeks. So when gold's risen, the stock markets fell. And when the stock markets had its big up days, which it's had a couple of them over the last few weeks, those have been the days where gold dropped. Yesterday was the exception when Federal Reserve Chairman Bernanke gave a speech in Jackson Hole. Markets responded positive both with the stock market and with gold. Now, gold had previously reached an all-time high of $1,800 last week, and everybody thought that was a huge barrier for gold to break and that it was going to have a correction. It did have a slight dip to about $1,725 before coming back up and surpassing $1,800 again, and this week we saw it reach an all-time high of over $1,900. Everybody said the same thing again, that it was going to have this big correction. It did drop back down to around the same level that it corrected the week before, to the low to mid 1700s, before jumping back up to 1830 after Bernanke's news in Jackson Hole. So what I think we're seeing here is really strong for gold. Not only is it a surging trend upwards, much like silver, but it's holding steady when a lot of people are saying that it's ready for a correction. It's really not. So that's an indication of what's going on. And the forces driving the price increase of gold is the same thing. It's the devaluation of the dollar, the Federal Reserve taking these actions to devalue the current dollars in the system, and that's why people are running to gold and silver. And it's central banks, it's government, and it's the small-time investor too, as well as the common people. Or everybody's looking for a hedge right now against the dollar. So it continues to drive the price up, and I don't think that $1,800, $1,900, $2,000, $2,500 is anything for a price of gold. It's still on sale. We're going to see $5,000, $10,000, $20,000 gold as the dollar approaches zero. The dollar's lost 97.5% of its purchasing power over the last 40 years, and it's not going to take long to lose the last couple percentage points. So really important that you pay attention to what's going on. It's going to be an interesting ride. Invest in yourself, financial education, buy assets, avoid liabilities, and let's grow together. We'll see you soon. Thanks.